If you live in California, your homeowner's insurance costs are about to spike under a new deal announced between the politicians and the insurance companies. Coming up, I'll tell you what's driving the cost increases, why politicians are actually the ones to blame, and what you can do to join the fight to fix the problem. I'm Carl DeMaio, chairman of Reform California. And in a previous episode of this podcast, I warned you that insurance companies were fleeing the state of California. You may remember back in May, State Farm Insurance, then Allstate Insurance, and then a number of other insurance companies all announced that they were leaving California, literally ending any new policies and announcing that eventually they'd be exiting. They said that they couldn't afford to write policies and cover losses in California anymore. Now, the liberal media and the politicians all immediately said, well, the reason why they're doing this is because of climate change. And even the insurance companies blamed it on climate change. I said to you back then, not only was it not because of climate change, but that I suspected that the insurance companies were doing this just to try to create the venue, the context, the cover, if you will, for politicians to agree to allow the rates to increase. And they could just simply say, well, we had to do this because insurance companies were leaving the market. We had to give them the ability to raise prices. And it's all because of climate change. That's the narrative. And that narrative is actually false. So let's see what's going on. First and foremost, it is true that insurance companies are losing money in California. They're losing money in California, not because of climate change, not because of claims being increased. They're losing money in California because the cost of living, the regulatory environment is so toxic, so costly to operate that the cost of doing business has spiked, not only for insurance companies as a business, like any business in California has seen increased costs. I'm sure you at home have seen increased costs of your living. But what is it that insurance companies cover? Two major categories: car insurance and homeowners insurance, property insurance. Well, for car insurance, what's going on in the car market right now? Are there suddenly a bunch more crashes out there because people are bad drivers? No. What is happening is the same level of car crashes, except for one difference. Have you checked out the price of a used car lately? Yeah, it's exponentially more expensive to buy a used car today, or even a new car, than it was just 2 or 3 years ago. Thanks, Biden. That's the inflation. Car costs are through the roof. So when someone has an accident or when someone totals their car, the insurance company is paying more to replace parts and replace and fix the car, but also substantially more if it's a total, if it's a complete loss. So the cost of cars has gone up, and also the cost of car maintenance or car repairs. And that's inflation. That's the hyperinflation that we've seen in the car market. Take a look at the price of building materials, lumber, pipes, copper. All these commodities did what? They skyrocketed in recent years. And in fact, lumber, I think at one point was up over 1,000%. The cost of labor for repairs, much higher today. So if you're going to be doing a home renovation, whereas it used to maybe perhaps cost $25,000 or $20,000 for maybe a bathroom and some other touch-up items in your home, it could very well easily be $40,000 to $50,000 today. So the cost of losses, the cost of claims, much higher than anyone expected in 1999, 2000, 2021. 2019, 2020, 2021. So what's happening? Businesses, insurance companies took premiums, then they were hit with claims, not an extraordinary higher number of claims, but just the same number of claims, but the losses associated with the claims was much higher than the premiums they had collected from the market. So they basically are stuck between a rock and a hard place. They need to increase rates, but the politicians, of course, don't want to let them increase rates. And so there's this little dance going on. Create this notion that insurance companies were going to leave the market. The politicians' hands were tied and they had to cry uncle. But in advance of this, though, there needs to be the media narrative, the false narrative to kind of soften up the voters so they kind of know what's coming. So take a look at this article in the LA Times. This article appeared September 14th. And this is 2 or 3 months after Allstate and State Farm announced they were leaving. And I said at the time, again, they're saying it's climate change. It's not. It's inflation. It's the cost of replacement in claims. But here's LA Times. Time to panic. The home insurance market in California is collapsing because climate change. And of course, the article goes on to say that it's climate change that's caused an increase in claims. But hold on a second. Nowhere in the article does it actually provide you with statistics that there are actually increased claims being filed against insurance companies. What they simply say is, wildfires are on the increase. That's actually not true. The number of wildfires is actually not on the increase. The severity of wildfires is actually on the increase. It's harder and harder to contain fires. And that's been happening 20 years in the coming because we don't allow for the thinning of forests in California. That's an environmental policy. That's not climate change. That's politicians basically creating a higher risk profile in those areas. So you see, the narrative is climate change without actually specifying, well, are we actually seeing an increase in the number of claims? What about auto insurance? You can't very well blame the climate change on auto insurance increasing in terms of costs. No, it's all the inflationary pressures. And you can talk to any of the insurance agents out there, and they will tell you that. Now, here is an executive order that Gavin Newsom issued last Friday. And what he basically says is, whereas climate change has increased the occurrence and severity of winter storms. Okay, so we haven't had floods before in California. In fact, the floods that we had in the recent year, much less than we were fearing given the amount of precipitation that we had. So it's all about catastrophic weather events. Oh, wait a minute. He does mention in the whereas higher construction repair costs, global inflation, greater reinsurance premiums. Again, reinsurance is a secondary market that insurers can take out in case losses are greater than the premiums they take in. Also code word for our model didn't take into effect all the inflation that suddenly hit America all at once, particularly in construction costs. Anyway, so Newsom orders the commissioner of insurance, who, by the way, is not a staff member of the governor, is the commissioner of insurance for the state of California, is actually an elected politician, completely independent. But there's some political jockeying going on here. We'll get to that in a minute. The commissioner of insurance is requested to take prompt regulatory action to strengthen and stabilize California's marketplace, blah, 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 blah. Anyway, so this executive order comes out at 2:30 in the afternoon on a Friday. Then at 3:30, the insurance commissioner does a press conference. There's Ricardo Lara, the insurance commissioner. He says that he has an insurance deal. Wow. It says things moved pretty quickly today. Around 2:00 p.m., Governor Gavin Newsom put out an executive order urging insurance commissioner Ricardo Lara to take swift regulatory action to stabilize California's insurance market. By 3:30, the insurance commissioner was holding a press conference on a new agreement the state had reached with wildfire insurance companies. I notice how they call them wildfire insurance companies. These are not... You can't take out just a wildfire insurance policy. You take out a homeowner's insurance policy. It covers for a variety of things: flood, mold infestation, a whole bunch of different things. I love how they narrative drive here. Wildfire, it's climate change. Leave it to the media to gaslight and try to carry the water for the politicians, trying to convince you that somehow it's climate change, not their failed inflationary policies here. So, by the way, You do understand that this was a deal that was all choreographed. The governor ordering it at 2:00, and then by 3:30, the insurance commissioner saying, "Oh, looky, I already have a deal. Boy, in those 90 minutes, we made a lot of progress." This is nothing more than manipulation. This deal was already in the hopper. The governor was trying to pretend like he had to order this to happen. The insurance commissioner says, "I was ordered to take action by the governor. Don't blame me." Finger pointing. They want to blame climate change. They want to say that they had to give the insurance companies rate increases because, by golly, they would have left the market. Now, Laura was asked, will this cause prices to skyrocket? Now, what did Laura announce? Laura announced that he would allow the insurance companies to factor in updated models for their losses, including risk as well as costs. In other words, they were going to update their inflation numbers. That's not what the article dwells on. That's not what Laura focused on. He just simply said, I'm going to allow them to update their loss models. What is the risk? But we're not seeing an increased risk in California because of climate change. In fact, if you take a look at other markets like, Florida, Georgia, South Carolina, where, they have hurricanes, and every time you see a hurricane on TV, what do the national media outlets say? Climate change caused the hurricane. Well, why aren't we seeing similar problems in those areas? What we are seeing is similar discussions about the inflation cost associated with losses and claims, because they don't need to go through the dance with these left-wing politicians in California that somehow the politicians need cover and they need to blame it on climate change because that's their political agenda. No, they're just simply saying it's more expensive now to replace anything having to do with a loss, and so we have to raise our rates because the premiums don't cover the level of financial losses when each of these occurrences happen. But Laura says, quote, the new model that insurance companies can use to set rates, it's going to allow us to modernize the way we look at risk. It works both ways. Okay, it works both ways. He says something about homeowners can harden their homes against fire. We already have those standards, not only in California, but nationwide. That's not going to change anything. In fact, insurance companies have come out year after year and they've told homeowners that they've got to do vegetation management and the like, particularly when you buy a new home and you're trying to get an insurance policy for the first time. That's standard practice. Nothing is new there. No, the new thing here is they're going to look at the inflationary cost of the claims being filed in each occurrence. So where are we headed with this? Rates are going to go up. But let me share with you where rates are currently in California. We're actually a little lower than the national average. We're about 41% lower than the national average in California for our insurance rates. Our average is $2,138, and that is $1,456 below. This is according to insurance.com, and their numbers are pretty good. But I want to share with you this comparison here, which are states, and I want you to look at the $500,000 home because that's an average low end in California. The average annual insurance rate for a $500,000 home insurance in California, as you can see right here, is $500,000. I'm sorry, is $2,138 for a $500,000 home. But again, Florida, which is not liberal, but is subject to hurricanes, which is highly climate change oriented. $500,000 is $3,530. Look at that. There is definitely a higher cost in Florida. Why? In Florida, they actually have market-based rates, and they were able to take into account the inflationary pressures. Again, it's not good news, but hey, Biden's inflation is never good for anyone. In California, we have a highly regulated market, which has capped it. Again, the rates are low. Florida is higher. Florida rates have actually gone up because of those inflationary policies, not because somehow there's a higher occurrence of hurricanes or somehow there's a higher occurrence of climate change related damage in that state. Nationally, we know that California's insurance rates tend to be a little bit lower. But under this deal, insurance companies have made it quite clear they cannot continue to have those caps, and there's going to have to be an adjustment. Now, I think that what we should do in California is go on a cost-cutting and a deregulation push for these insurance policies. How do we cut the cost of construction labor, construction materials? How do we make it more cost efficient for insurance companies to operate? That alone will not shield us from the national inflationary policies that Democrats have created. But again, you need to understand and be ready for your insurance premium to spiral up and skyrocket. We need better political representation. We need politicians that aren't going to scam us or lie to us about climate change, but are going to give us the honest truth about what's going on in these markets, why costs are going higher, and actually lay out policies that relate to the core drivers of the problem. They haven't done that here. All they've said is climate change, and then we're going to allow the insurance companies to make these changes. They won't improve their fire management practices in California. And they certainly aren't going to try to reduce the cost of operating in California either. That's why at Reform California, we're leading the movement to try to get better political representatives elected at all levels of government. Go online and join the fight at reformcalifornia.org. That's reformcalifornia.org. Like and subscribe to this video so that you can share this information with your friends. They need to get ready for those skyrocketing insurance premiums. Until next time, this is Carl DeMaio, Chairman of Reform California. Thanks for watching. Help us break through the censorship of the liberal media by liking this video, sharing it with your friends, and subscribe to my YouTube channel.